Hello. My name is Geleta, Assistant Professor of Accounting and Finance, and I'm going to give highlight to you about accounting for public sector and the civil societies. And you can join me through this email, through Telegram, and through other platforms. And you maybe get other video or lecture, especially for students in the university. Saying it is, I start with why standards nationally, what why standards needed for most of the organizations, why having similar standards is important. We are going to discuss in detail. And as you know, most of the nations have not have their standards, and maybe they are based on USA GAAP. And having similar standard among the nation, among the globe is important for maybe the organizations to prepare good financial statement, and so for professionals. Maybe the professionals in Ethiopia is maybe other can prepare, can do somewhere in Kenya and Sudan and so on. But then for a country is having the same standards, it's also good and the most important. Then why financial reporting? It's because why financial reporting on the most of you, as you know, is maybe having high quality, transparent and comparable and understandable financial information is important for the organization. That is important maybe for the donors in knowing where the money there is a gift for any sector, for any nation is expensive and so on. Then so for maybe auditors, this report is the most important. Then when the accountants prepare their financial statement by having the similar standard across the globe for the auditors, for the leaders, for the interest users, it is also easy to understand and then where this organization is there. And then in general, if there is no transparency or accountability interest, as you know, if no interest, no grant or donation. Yes. Then for the donations, they may be financial institution or other sectors give, they must be trust, they must be know what is the financial statement. Then if there is no grant or donation, there is no social services, no school, no hospital, and so on. Social service is, as you know, there is no community development. In similar manner, no quality financial report means no trust by the investor or the lender, no trust by the lender or by the investor means no finance. No finance means there is no any activity because, as you know, finance is a blade of an organization. For me to do, you must have finance. There's no investment means no development. Saying it is that one, we are going to see the difference between this IFRS IFSAS and IFRS for SME. Especially this IFRS is designed for profit-oriented organization, for business enterprises. And this IFSAS is designed for public sectors. And the IFRS for SME is most of the time for not publicly accountable entities. Then this is give information. IFRS give information to the investors, the lenders, and the creditors, whereas IFSAS is give information to service recipients, maybe public but in the resource providers. The use of IFRS for SME is for broad range of the group. This most of the time, this IFRS is assessing about the prospects or future net cash inflow. Means especially IFRS related with business organization means how they generate cash, where they get cash, their main concept. But under the IFSAS, stewardship, that means whether the management, whether the budget allocated is in line with rules and regulations. It's important. So having this IFSAS is also important. And then targeting this one is action, to take action. IFRS especially to take action, to hold, to buy, to sell, to make a decision, to withdraw a loan on this one. With that, IFSAS is important for public authority where the service delivery is their school, is their hospital to the society, to the public, where the money is spent, which come from different sources, and especially IFRS for SMEs to make an economic decision. And the other issue is qualitative characteristics of general purpose financial reporting. As you know, these are the qualitative character to show what the general purpose financial reports look like. Relevancy, peaceful representation, understandability, timeline, comparability, and verifiability. IFRS says if relevancy and faithful representations are the fundamental one, the other one is enhancing research, but IPSAS can use all of this qualitative character is important for the report we made. The other issue is general users of financial reports, as you know, are donors owners use, tax authority use, statistical office use, public at large use, regulator use, lender use to make a decision. For example, tax authority, how much tax is collected, then where it is spent. And so statistical office, what is the GDP of the people in this nation, to know that what the report, the financial report is made by the accountant, by you, is important for organizations. The other issue is the standard rate setter of the framework. Who said IFRS? Who said IFRS for SME? Who said IPSAS? Especially the IFRS and the IFRS for SME standard setters are international accounting standard board. And the standard setter IPSAS is, as you know, International Public Sector Accounting Standard Board. And these are the principle-based. But the previous US GAAP is a rule-based. The principle-based, when we say it may be open a window, a room for accountants, professional accountants to judge in good manner. The other issue is IPSAS background. As you know, this international public sector accounting standard is a globally accepted standard. Now, it helps a financial statement preparer to have and to present and to produce high quality, transparent, and comparable financial information. And most of the time, as we know, the standard is used by public at large. And the adoption, the conversion, or the scope of this IPSAS is touched almost all every public sector. The IT, the software part is maybe, yes, touched while we are adopting this new standard. Then IPSAS are designed to public sector, as we said earlier, especially who fill the criteria says for delivery of service to the benefit at large. Yes. And this IPSAS is applied for especially for sectors, for organizations which finance their activity by tax, you see, by transfer, by debt, by licensing, by other means. And with the exception of this, others use or apply IFRS solution. Then how we make this benefit realization plan or IPSAS benefit realization plan success? How? Then everybody must be communicated. Information must be disseminated. Training must be given. Management of the organization must be taken into consideration. Unless otherwise only be shot by the accountant, by we are not make it success. You see, the last other issue is objective of underlying concepts in the use of IPSAS. It says, we say, beyond each standard, beyond each IPSAS, or there are around 41 or 42 IPSAS standards out there. Beyond this, there is conceptual framework. Knowing this conceptual framework is also important for the readers or the preparers of financial statement. Because if you are maybe dilemma related with certain standards, you must go and read the conceptual framework. Then there are two types of financial reports under the public sector. The first one is general purpose, and the second one is special purpose. Especially this general purpose financial report are the entities which or the parties which need report as a public at large, and they do not command the reporting entity to provide the financial statement to them. Yes, they are simply see or read from the notice. You see, And then that of special purpose of authority and the right to enforce the reporting entity to provide financial statement to the maybe tax authority, maybe the regulators need their special purpose. The other issue is key character of public sector. The first one is net exchange transaction. As you know, when you say net exchange transaction, taxpayers pay tax, and they maybe do not expect equal benefit from the government. Then in such cases, in net exchange transaction, public sector use approved budget, public sector have durability, public sector have assets and liabilities for different activities. Public sector play a regulator role, and public sector also issues statistical report to the concerned parties. The other issue is IPSAS accrual. IPSAS accrual now, this IPSAS is encourage accrual one. Of course, cash-based accounting is also used. The accrual one is designed for especially for public sector entities, for the primary users, for the resource recipients and the representatives, and for the resource providers. Generally, this IPSAS is mainly applied for national, regional, local, and maybe all international government organizations like WHO. They use IPSAS. They use IPSAS standard to prepare their financial statement, especially using this one, using this IPSAS, general purpose financial reporting, maybe to support the discharge of the obligation and the accountability, where the money is spent, and also for making a decision, and so on. And under IPSAS, general purpose financial report, these are the elements of financial. The first one is financial position, financial performance, and the cash flow. Financial position assumes the previously in balance sheet. Financial performance is maybe profit or loss in public sector. Of course, there is no profit or loss rather than the surplus and the deficit, and then cash flow, financing activity, investing activity, and operating activity. Then approvability in the public sector to be stated on IPSAS 24. Service delivery achievement is prospectus of financial and non-financial information and explanatory information explaining what is the beyond each number. You must be explained in public sector. The other issue is IPSAS cash basis are there, of course. IPSAS cash basis where cash received, where towards the cash paid, what is the cash balance, and especially the standard encourage the reporting entity to voluntarily adopt or move from cash basis to the actual basis. The other issue is how IFRS or IPSAS treat this account, borrowing cost. IFRS qualify as a asset. IPSAS says it give a choose for you, either expense, either as asset. Of course, asset impairment, asset is impaired, especially in public sector, there is impairment. There is value in use. Impairment is there means we are going to check value in use. But IFRS says, do not imagine if it do not generate cash. I do not imagine it says. Research and development, also of them, they're going to be recognized as qualifying asset, of course. The other issue is IFRS and IPSAS related issues. You see, IPSAS and IFRS table. What IPSAS 1 say? What International Accounting Standard number 1 say? It says about presentation of financial statement, how we present financial statement, what is it must be contained. For example, IPSAS to cash flow statement, how we treat it tell us. IPSAS 4, which is found on International Accounting Standard number 21, is what is the foreign currency translation, foreign currency exchange rate, currency fluctuation, it tell us. And then IPSAS 23, accounting for policy changes and accounting estimate and other subjects. And as an accountant, we must be know the standard. If you are confused with standard, I say try to read the conceptual frameworks. For example, if it's about inventory, International Accounting Standard says this is found on International Accounting Standard number 2. How we treat biological asset in public sector as well as in business sector. In such way, you can, yes, in such way, you can treat the accounts thank you for your attention. And any doubt, any question, you can maybe write through my email as well as my Telegram and so on.